All right. Good morning, everyone. It is 8:57 in the morning of March 14th, 2022, and this is my pre-market strategy session. A little bit late getting into the office today, and then ran into a couple technical issues. I've got an experiment I'm basically doing with my computer where I'm starting to mine some cryptocurrencies, and well, I've made some tweaks to my computer and it's sort of destabilized it. So anyway, let's get into it here. A couple things right off the top here. I've got TNX, the 10-year bond yield up right here. Let's pull it up on the daily here. If you look right in this area, you can see that the yield is right up against the high end of its risk range here. Kind of take that line away, take away that risk range line right there away, and you can see it a little bit better right there. And so it is a good time to, get long bonds, believe it or not. So I think, in a traditional chart kind of way, this right here is really bullish looking for yields. And I wouldn't be surprised to see a lot of people make the case that yields are going higher from here for the way that this chart looks. Really, this is a very bullish chart. A break, this sort of zigzag pattern, that gets put in, and then a break above this recent price right here. It does look to me as though yields have higher to go. The bond market is attempting to price in whatever the Fed is going to do, and the market, it's really hard to say. Will the Fed, hike, blah blah blah? I don't know. And I actually really don't think that the Fed is going to be able to hike very much. Actually, the economy's slowing down. Numbers are coming out. I was listening to Bloomberg on the way over here, and I really can't stand Bloomberg. But the morning show, but it's better than the pop radio. There's on the radio these days, it's either 1970s, classic rock, 1980s classic rock, or modern day pop, and it's God, just radio these days, So anyway, I was listening to a little bit of radio on the way here. I usually don't. I usually have my phone going, but all right. So, Bloomberg is oh my goodness, the data's coming in and it's slower. It's surprise, surprise. The economy's slowing down. Is the Fed going to tighten into a economic slowdown and exacerbate what could be a slowdown exacerbated into a recession? Well, I don't know. Probably. That's usually the way it goes. Once the Fed starts to tighten, the economy goes into recession. That's just the way it goes. So the yields are heading up right now. Obviously, there's this rather steep move, this bounce off the bottom end there, and pretty steep move up. I'd be surprised that this is the top end of the range. I'd expect the top end of the range to coincide with the move that gold is putting in right now. So here's gold. Gold popped through the top end of its range here last week for a couple days, and then plummeted down. And now, it's I don't want to say it's correcting. I mean, even though technically speaking, if it moves down, I mean that's a 5% correction if it goes all the way from 2079 all the way down to 1917. That's a what is that, a 7.5% move? So I mean that's corrective enough. But I'd expect to see gold hit this area and start moving back up again. And if I'm more likely to trade gold, its signals look more clear to me than rates do right now. It's not a bad time. I don't think it's a bad time right now to start averaging into a short position on rates, which means long bonds, long bonds like the TLT, the long dated, long end of the curve. I believe that the end of the curve is going to start coming back down again once we get into the next earnings season. And when does that start? Let's see, January, February, March. Yeah, so the next earnings season starts in April. Is that right? God, it seems like we just started earnings season. But all right. So yeah, and then once rates start to come down, that'll have an inverse effect on gold. So it's a decent time to be long gold. Inflation is still elevated, and the Fed is not going to be able to mitigate the inflation quickly enough. And blah blah blah. Narrative this, narrative that. Yeah, it's a good time to be long gold and short rates for the time being. Average in, take your time. There's no rush. This move is going to take a while to develop. I mean, look at this. Look at that. It's got to correct. I mean, look at that huge move. 17. Let's take a look from bottom to top right here on this last move. Let's see what the percentage is there. Let's see all the way from. I'm gonna just do it from the 20th of January up here to the 8th of March. That's a 16.75% move in gold. That's the way gold works. The gold will like consolidate and move around like in one region for a long time, and then all of a sudden, zoop, it goes up real fast. So this is probably not the end of this move, and it looks like to me it's trying to bang out a bottom. I think it's got a little bit further to go until it bangs that bottom out. All right, let's see the SPX. Actually, let's look at the futures. Yeah, so the futures, there's a little bit more upside than downside in just the plain old numbers today, but things are still bearish. So the downside, even though there's more room to the upside, the probability is still that the S&P as well as the NASDAQ or the Russell are all kind of moving to the downside here. In particular with rates that are kind of running up like this, the broader market doesn't like the higher rates. So, right now that's a sign of an improving economy when rates are going up, but still the stock market doesn't like it very much. The VIX, so the bottom end of the VIX is at 28.34, still really quite elevated here. And then the top end is at 36.94. So at either extreme, if the VIX hits either extreme, at any point during the day, it'll be an opportunity to either buy or sell. The dollar, so the dollar is a little bit on the upside. There's more downside to upside on the dollar, but the dollar is bullish, so that means it's more likely to go higher. So I'll be looking for bullish setups on the dollar. Actually, I don't like to play the dollar. Actually, what I like to do is I like to watch the relative strength on the dollar to time that with how things are going, what I'm going to do in the market. So if the dollar intraday on the 1 minute and the 10 minute starts to show a lot of weakness, basically that means it's an opportunity to buy the dollar. And if the dollar is getting stronger, that means it's going to be a headwind on the broader indices, whether it's the S&P or the NASDAQ, so on and so on and so on. And so, I don't actually trade the dollar. I don't look for setups on the dollar. I just use the dollar as an indicator, really. So the dollar is basically bullish, which means the rest. It's really surprising. Commodities are actually bullish despite the bull run in the dollar, which really means inflation is going nuts if commodities are running higher. And actually, you know what? I want to take a look at coffee. Apparently, coffee looks like it's about to top out. That's what the hedge fund consultancy firm that I use is saying. Okay, so gold, oil. So oil, look at that volatility on oil. My goodness. Yeah, I'm more in the camp that there's really. There's so many people that are bullish oil, and I mean, really, it does make sense. I mean, look at this, so I'm going to take this one away real quick. What date? Where is that? I've got that on the 2nd of March. A little bit of a blow off top happening here. Essentially, here's USO. These yellow lines right here are a gap from back here in 2020 when the crash started to happen. And I get it, the economy's opening back up and everything, and then also on top of that, we've got, Russia and Russia invading Ukraine, which is driving up speculation on oil prices. And in addition to that, we've got the Keystone Pipeline, which was shut down by the Biden administration. The U.S. went from being a net exporter to a net importer, and the dollar is getting stronger, and the I'm really surprised to see oil make it past this gap. Now, here comes the test, really. So I didn't manage to short oil back here on the 24th of February as it fell back down below the top of the gap right here. And I held on to some of the shorts that I put on, and I wound up letting them go right back here on this day right here when it gapped up higher. So it's kind of like, I did a little bit better than break even, but I certainly didn't, do super well on that trade, So it's kind of like, okay, life goes on. It looks to me like what's happening here, pre-market this morning, it's at 73.88 after a close at 76.44. It would make sense to me to see break through this price channel, come back, retest, and then move forward. Now, I will be a believer in long-term higher oil prices if this thing can break, if USO can break 87.84 after it retests here, the 68.80. But until then, I'm bearish. I think that we've seen the top on oil. I think Russia can go pack sand. Russia, in Ukraine, it's like once things start to settle down there, and it looks like they are going to settle down there, and everyone is comfortably, in tune with the narrative that oil is going to continue to flow, there's not going to be anything there for the speculators. It's my opinion. We might hit this level and go a little bit higher again, but then that's it. We're done. We're down. Oil is going to start tumbling because the production is going to get ramped up, and so on and so on and so on. So I think this oil move is completely and totally overdone. This is what I think. We'll see, though. So this isn't investment advice or trading advice. This is just what I'm doing. All right, Tesla. So there's kind of a lot going on here in this chart. There's a bit of a downward wedge right here in Tesla. It closed below this wedge, so it's it's a tech company. I mean, even though it's an automotive company and Elon Musk, I mean that guy's got some amazing things going on. Tesla is just one automaker out of many. He's right now. There's no doubt that Tesla is the leader in electrical vehicles. The behemoths, Chevy, Ford, the European makes, Porsche in particular, BMW, so on and so on and so on. Everybody's going to start doing electric vehicle. The benchmarks are high, and I don't think that they're going to catch up to Tesla anytime soon as far as being able to match productivity and so on and so on. But that doesn't mean that in the meantime, Tesla stock has to stay elevated also. So we've got a pretty big down day here last Friday, getting real close to the bottom of its risk range. It's breaking down below this bottom wedge right here, which I'd expect, a close below that, before on a couple of occasions here have been false breakdowns. So, one false breakdown, second false breakdown. And even really a third false breakdown right here. Usually 3 strikes you're out, and I would expect it to take off to the upside. That's no hard and fast rule. 3 strikes you're out. That's not anything that I think anyone really has ever said or done or really relied on. But whatever. So it's still breaking down. Amazon consumer discretionary and consumer staple. and tech are all kind of in a bit of trouble. And Amazon represents quite a bit more than just consumer staples, consumer discretionary, and tech. There's sort of like entertainment, and then everything that it sells that's outside of discretionary or staples. That's like, I don't know, got stereo equipment or who knows, computer equipment. I don't know. Amazon kind of represents that, and but the main things that drive its price are headed down, so I wouldn't be surprised to see more downside. I'm looking for bear setups on the Amazon and Tesla, and let's see, pretty much the broader markets, S&P, Nasdaq. I don't really trade the Russell very much. Bullish the dollar, bullish gold. Just kind of waiting for all the setups to happen. It looks like there's some setups that are coming forward with the 10-year. Otherwise, I'm not really watching anything in particular. I in these times like this, when things are kind of headed down like this, I usually don't pay attention to the scanners too much. I usually don't use it because it's kind of like things are moving on the broader market. There's plenty of opportunity, and in fact, I titled this video "A Different Day, Same Roll of Toilet Paper." I hate to be mistaken. These are great times to trade. The markets are just popping up and giving incredible opportunities every day and easy money. I mean, trading's never easy, but the opportunities and the signals are as clear as they get. So it looks to me like probably be another day to just look for bear setups on the broader market, bullish setups on the things that are bullish in bear markets. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.